And now to our market monitor, who has stock picks he says could rise between 10 and 15% over the next year. That's pretty good. Last time he was on in July 2015, he recommended Cypress Semiconductor, down about 2%. Intersil Corporation, which is up 92%, and Maxim Integrated is 24% higher. He's Don Wordell. He's portfolio manager at Ridgeworth Capital Management. Don, welcome. Let's start with Cypress, which is still on your list. One of your picks this time.
Oh, absolutely. The stock has underperformed because we went through an inventory cycle, and there was some turmoil in the management levels. We've gotten that resolved. We've burned off that excess inventory. Gross margins have bottomed. We've got a new CEO in place who's going to restructure the business. And we think that over the next 12 to 18 months, as they continue to have some really great products for the, as the internet moves into your car, they develop a lot of the internet products for the Internet of Things for your car. And this company gets the inventory situation right. You're getting paid a 4% dividend while you wait for all this. We think ultimately they can earn $1.50 a share, put a market multiple on that, which is still cheap to the group. And you've got a stock that'll be in the low 20s, and it's trading in the mid 11s right now. So we think this is a powerful one and a stock we really like.
You also like Cigna, and they are in a deal with Anthem, but you say regardless of whether or not that deal closes, you still like the stock.
Oh, absolutely. Cigna has not been buying back stock. They've been, during this negotiation process, since the deal's been announced, they haven't been buying back stock. They've been just, building up cash on their balance sheet. And, at the end of the day, whether this deal happens or not, this company is going to, if the deal happens, you're going to get a 30% pop in the stock in the next probably 2 or 3 months when we get this resolved. If the deal breaks, then they're going to get a big windfall of cash from Anthem. They're going to start buying back stock and get back to executing their business model. I think that in 2018, we're looking at them earning probably, $12 a share, if not more. And then, you again put a 15 multiple just to be conservative. You got a $180 stock on your hands, and it's 130 something today. So we think there's tremendous upside in that one as well.
So we started with chips, we moved on to healthcare, and we're going to close with paint. Tell me about it.
Oh yeah. Oh man, we love paint.
Who doesn't love paint?
Sherwin Williams. I'm sorry?
I say, who doesn't love paint, man?
Oh, exactly. Yeah, Sherwin Williams is just a great company. I mean, all of these companies we're talking about will benefit from some of the things that are very important to investors now with, tax reform and the like. But Sherwin Williams is in the middle of a deal right now themselves. They're trying to acquire Valspar. Sherwin Williams owns the paint distribution with their paint stores. They do sell in some of the big box, but they're able to be price setters in their paint stores. So the market's a little concerned about the fact that the raw material for paint's going up with the price of oil, and they're able to offset that with price increases. Volumes are increasing right now. Okay. If you get Valspar done, integrate it's very accretive. We can see this company in the up at least 15-20% over the next 12 to 18 months. So we're very excited about paint, and it's just a really good company all the way around.
Well, Don, get out there and paint this weekend, okay? Don Wordell with Ridgeworth Capital Management.